Business news now, and Stephen Carroll joins me in the studio. Hi, Stephen.
Hi, Belle.
And we're starting in the US, where Donald Trump is gearing up for this all sorts of changing regulation on banks.
Donald Trump says he's going to give banking rules a haircut to make it easier for them to lend money to people. In particular, he wants to overhaul the Dodd-Frank reforms that were introduced after the financial crisis. Mr. Trump claims the rules hurt lending, but in fact loans to consumers have increased dramatically since the reforms were introduced. Speaking to business leaders on Tuesday, Mr. Trump said that work had already begun on the changes. Yuka Royer has the story.
That's so beautiful.
Inviting business leaders to the White House, Donald Trump said the era of what he saw as horrible banking regulations would soon be over.
So we're going to do a very major haircut on Dodd-Frank. We want strong restrictions. We want strong regulation, but not regulation that makes it impossible for the banks to loan to people that are going to create jobs.
Trump's target, the Dodd-Frank Act, was signed into law in 2010 after the financial crisis, which saw hundreds of billions of taxpayer money poured into bailing out banks. The aim of the law was to reduce systemic risks to avoid another recession, subjecting banks to more stringent regulation and giving better protection to consumers. The Act created a Federal Financial Stability Oversight Council to monitor the health of banks that are too big to fail, and required banks to keep enough cash to face potential crises. It also aimed to rein in reckless lending by restricting loans to only those who could afford them. Many Wall Street executives have been lobbying for a rollback of Dodd-Frank. In his annual letter to investors, JP Morgan's CEO Jamie Dimon said that while many of the rules are fine, it is clear that the banks have too much capital, and more of that capital can be safely used to finance the economy. The US president already ordered a review of the act in early February, but the administration has yet to deliver details of an alternative plan. And despite Trump's claim that it's been disastrous for the banks, data shows Dodd-Frank hasn't slowed down lending. Since the law was enacted, lending to consumers and businesses has continued to grow to record levels, and so have the bank's profits.
Donald Trump's also on the mind of stock market investors today ahead of his meeting with the Chinese President Xi Jinping tomorrow in Florida. Chinese markets back in business today. They were closed earlier in the week. They're trading up, boost particularly for construction firms after a plan announced over the weekend to build a new special economic zone which was trying to replicate the success of Shenzhen. So that's giving those construction firms a boost. In Europe at the start of trading, it's a pretty flat start to the day actually. We've just got some gains on London's FTSE 100 up around a third of 1%, but flat starts in Paris and in Frankfurt.
And tell us a bit more about this story, Stephen. A high-profile official has resigned from America's central bank.
Jeffrey Lacker was the president of the Federal Reserve of Richmond. He's resigned after admitting he'd broken confidentiality rules in a conversation with a financial analyst in 2012. During the exchange, the analyst revealed that he had secret information about an interest rate decision, and Mr. Lacker failed to report that information to the bank. That sort of information is highly sensitive, and the Fed's been investigating the source of this leak for years. Looking at some more of today's business headlines for you. The music streaming service Spotify has signed a new deal with record giant Universal. It'll allow Spotify's paying subscribers access to new releases for 2 weeks before they appear on the free service, while Universal, in exchange, will get access to valuable data on what music people are streaming. The deal is a major milestone for Spotify, which is trying to sign similar long-term arrangements with Sony and Warner. Alitalia has cancelled 60% of its flights today as unions begin strike action at the airline. The parties are set to begin marathon talks tomorrow on a rescue plan for the loss-making Italian carrier. Unions have already rejected a plan to cut 2,000 jobs. And Amazon is set to begin refunding as much as $70 million to customers whose children made in-app purchases without their permission. The Federal Trade Commission says it's reached a deal with the online retailer over the issue after complaints the company hadn't put in place sufficient safeguards. The refunds will concern transactions between 2011 and 2016.
And finally from you, Stephen, Warren Buffett, that billionaire investor, is going to become a familiar face in China now.
An even more familiar face, in fact, because his face is going to appear on cans of cherry Coke in China. Now, he gave his permission for his image to be used in a series of limited edition cans. They've just launched cherry Coke in mainland China. His firm Berkshire Hathaway is the biggest investor in Coke. It owns around 10% of the company. And Mr. Buffett, whose investment advice is followed around the world, is particularly popular in China. So a spokesperson for Coca-Cola says they were surprised that he agreed to it, but so far he's selling well in drinkable version.
Would you like to have Warren Buffett on your Coca-Cola can?
Coke? I don't like cherry Coke, to be perfectly honest.
Well, there you go.
So.
Not even a question you need to consider. Stephen Carroll with The Business, thank you very much. And we're